Do you know the one mistake traders commit that makes all of their trading knowledge useless, leading to failures? If the market always seems to move against you, then this might be the key to make trading just click for you overnight.
The easiest way to determine market bias is by following the price from higher time frame to the lower time frame, which means you move from monthly, weekly, daily, H4 and even to the 15 minutes. We are currently on the USD CHF monthly time frame. Now I'm going to guide you from higher time frame all the way to the 15-minute time frame just to show you how you can easily determine the market bias. Now currently you always want to focus on the current price action where price is at the moment. And you want to focus from the left side to the right side of the market where market is going overall. Now you can always help yourself with the arrow to starting from the highest point in this case all the way to the lowest, and we don't need to go far away because this is nonsense and this price action already happened. That's why we always want to focus on the current situation. Now the current situation, as you can see, we had a push down, we had a pullback, we had a push down that broke the structure on the left, so it broke the low, we had a retracement, and we had a push down that broke the structure again. So the current situation, as you can see, we had impulse, correction, and impulse, and we ended up being bearish. So the current market trend is bearish, right? And when you're done with the arrows, you always want to focus on the current situation. So you want to check the current market closure. As you can see, we are bearish, and you want to see the previous market closure. And as you can see there, we are as well bearish. So currently on the monthly time frame, we are bearish on the USD CHF. When you're done with the monthly, you go to the weeklies. So on the weekly time frame is the same thing. Now, you always want to focus on the current situation like I always say. Why? Because we already saw everything on the monthly. So currently, as you can see, we are bearish on the weekly. So you focus on the last piece of the candles. So we have 1, 2, 3 candles that are bearish that broke the structure. So by breaking the structure, I mean this low and this low, which means that we have BOS, which means that market wants to go even lower. Now, current market closure on the weekly is still bearish, so this is okay. And the previous one was still bearish. When you're done with the weekly, you go down to the daily time frame. Now, the daily time frame is a bit more tricky, right? So, to not complicate things, focus on the current situation. Especially if you're a day trader, you want to focus on the current daily candle because you're trading inside of the one daily candle. You're not trading swing trades, which means that you want to catch movements that last for a few days. But as a day trader, you want to see where the market is headed in this day, right? So in this case, you can see we have daily closure, which is the bearish closure, and we might see some sort of retracement given the fact that we have rejections to the downside. But at the moment, we are still bearish. So on H4, you want to structure down the price action. Now, we saw on the daily time frame that we are having rejection. And those rejections are clearly seen on the H4, as you can see. We have this rejection, we had push up, we had retracement down, we rejected this area, and we are pushing higher again. Now, if we wanna see some bullish side of the market to test this structure that got broken, we have to see this previous H4 high gets broken as well. So we want to see breakout to the upside, we want to see retracement, and then push higher all the way to this structure to be tested. Now, when the market arrives to this region, we don't know if this is going to actually be tested or is going to break above. So that's why you always want to be patient when price arrives to your areas of confluence. So how you can help yourself on H4 to determine the current situation? You always want to use the arrows if you want to, right? So we have push down, we have the first bottom, we have push higher, we have push down, and we have push higher. So the current situation is bullish. And even if I go to the lower time frame, such as 15 minutes, you can see that we are going to be currently bullish, and we can possibly see the setups inside of this situation if we will do the whole analysis. But this is just the trend video. Now remember when I said focus on the current situation. So always focus on the last piece of the candles. Monthly, focus on the last and the previous monthly candle. Weekly, as well, focus on the last and the previous weekly candle. On the daily, focus on the current daily situation and the last daily closure. On the H4, focus on the current session movement. H1 as well, 15 minutes as well. Keep it simple. Now, how you can determine the session movement, right? Usually, sometimes London can be bullish and New York can be bearish, right? But you always have to stick to the overall market direction. Now, how you can use that into your own advantage is simple. Now, you always want to follow the few steps. First step is market direction from the higher time frame. Second step is in which market phase is the current price action. And the last step is which side of the liquidity gets taken first. Meaning, let's say the market is bearish overall, so it's moving down. We have the Asian session, which is probably going to be the range, right? And liquidity is being built up and down, right? On the both sides. And then the London session opens up. Now the London, if the market is bearish, it's usually going to take the Asian session high and then collapse, right? Causing the break of structure. Now, when London creates impulsive movement, sometimes it gets retraced in the same session, but usually the New York session is going to make the retracement up to the area of confluences, and then is going to continue with the overall trend, causing the break of structure and moving price to the downside. Okay? Let me show you the example on the live chart example. Now, we can see that this blue box is the Asian session, this green box is the London session, and this white area is the New York session. Now, as you can see, we had a range in the Asian session, and the early London, so the Frankfurt Open in the Europe, caused the liquidity being taken, which means that we had this high, which is the previous daily high, was taken out. We have the Asian session range was taken out, and then the London session caused the break of structure to the downside, which means that market tends to move to the downside. Now, this is the impulse movement that we are interested in, right? We only need to see the retracement up, whether this is going to happen in the London session or it's going to happen in the New York session, to follow the trend and go with the overall market direction. Now, in this case, we have the order block, which is my favorite to use. As you can see, the price perfectly rejected the area and collapsed. Now, in this case, if we want to use the short position, we have the entry on the order block, stops just above the high, so this high, right? And 1 to 2, 1 to 3 risk reward ratio, and you can see we hit it to the T. So what we target was basically, we target the London low. Now, I know that this is a lot of information currently. Going to explain everything in the next videos. What is the order block, how to use it, what is the liquidity and how to use it, etc. So pay attention to the videos I'm going to upload every month. If you like the video, make sure that you subscribe, make sure that you like and comment your thoughts, and see you in the next video.